Imagine this. You've poured everything into building your dream project. You've got it insured for millions, and then you watch it crumble. But when you go to file that claim, you get a hard no. Today, we're unpacking that exact business nightmare.
And this isn't some made-up scenario. We are diving deep into the real-life case of Anjanay Rice Mill versus their insurer, Bajaj Allianz. By figuring out how a massive claim like this was denied, we're going to uncover some really crucial lessons about the insurance policies we all think we can rely on.
All right, so let's set the scene. Our story kicks off in West Bengal. A company, Anjanay Rice Mill, is building a brand new facility. And, like any smart business, they take out a huge insurance policy with Bajaj Allianz to protect their investment. But what was supposed to be their financial safety net, well, it turned into a massive legal fight. And when I say huge, I mean it. We're talking about an Erection All Risk policy, or EAR policy, worth over 17 crore rupees. This thing was meant to be a financial fortress, covering the entire construction project from start to finish in 2007. Then a big storm hits, and boom, this is the first bill. Nearly 81.5 lakh rupees, just to repair the initial damage. A number like that immediately put the rice mill and its insurer on completely opposite sides of a very, very expensive problem. And just look at how fast this all went down. The policy starts on January 8th. Less than 2 months later, bam, the first major damage. Then 2 more incidents follow in April and May. By September, the insurer just straight up denies the claim. It's a crazy fast and absolutely catastrophic chain of events. So if you're the rice mill, you're probably thinking this case is a total slam dunk, right? You had a policy, a storm came through, the building got wrecked. What more is there to even talk about? Their whole argument was pretty simple. A bad storm is a classic act of God. It's an external, totally uncontrollable event. You know, it's the exact reason you buy insurance in the first place. They saw themselves as the clear victims of a natural disaster, and they expected their policy to do its job. But Bajaj Allianz didn't just write a check. Nope. They decided to do their own digging. They brought in surveyors. They even got engineering experts from Jadavpur University involved. And what they found, well, it painted a completely different picture. So suddenly, you have these 2 totally conflicting stories. Was the building brought down by an external force, an act of God, which the policy should cover? Or was the building so flawed from the inside that it was basically destined to fail, a risk that might not be covered at all? The report from the university experts was just brutal. They found that the very blueprints were flawed. The design calculations, unsafe. The drawings, incomplete. And get this, they hadn't even properly planned for things like how the soil would settle or accounted for the minimum wind force the building was supposed to withstand by law. And the problems didn't just stop at the design phase. Oh no, the actual physical construction was just as bad. The report found honeycombed concrete, which means it was just riddled with weak air pockets. Steel rods weren't overlapped right. Some were even rusted. It was a picture of a building that was, frankly, a disaster waiting to happen. And then came this bombshell from the surveyors. After asking around locally, they reported that on the days of the supposed disaster, there wasn't actually any severe wind or rain in the area. This completely torpedoed the rice mill's main argument that an act of God was to blame. All of this investigation, all this back and forth, it leads us right to the heart of any insurance fight. The policy document itself. Because the answer to this multi-crore rupee question was hiding in plain sight, right there in the fine print. Now, before I show you the exact words, you have to understand this one concept. It's called an exclusion clause. Think of it this way. It's the part of your contract that says, hey, we've got you covered for A, B, and C, but we are absolutely not covering you for X, Y, and Z. Knowing your exclusions is honestly just as important as knowing your coverage. And there it is. The smoking gun. Exclusion D of their policy. It explicitly says that the insurance company will not pay for any loss or damage that's due to faulty design, defective materials, or bad workmanship. The very things the experts from Jadavapur University found were specifically excluded from coverage.
So the whole mess ends up in front of the National Consumer Disputes Redressal Commission. The court has two totally different stories. One very clear exclusion clause. So how did they connect the dots to make a final call? Let's take a look. The commission laid it out pretty logically. First, they said the official surveyor's report is a really big deal and carries a lot of weight. Second, they found the insurer's expert report to be solid and credible. Third, they kind of sidelined the rice mill's own counter-report because it was done on the sly without telling the insurer. But the knockout punch was step 4. The proof of bad design and bad work lined up perfectly with that exclusion clause. So the conclusion was inevitable. The damage wasn't from a covered storm, it was from excluded faults. Claim denied, case dismissed. So, okay, a really tough break for this one company. But what's in it for the rest of us? This case actually serves up some hard-won lessons for anyone who's ever bought an insurance policy. First off, there was a pretty big silver lining here for businesses. The court made it clear that even a company buying a commercial policy is considered a consumer. And why does that matter? It means businesses have the right to fight their insurers in consumer courts, which can be a much easier and more accessible place to get a fair hearing. So let's pull the key lessons from the rubble. Number 1. And I can't say this enough, read your exclusions. What your policy doesn't cover is often the most important part. Second, quality control isn't just about making a good product. It's about protecting your insurance coverage. Shoddy work can make your policy worthless. And finally, if you're going to fight your insurer's official report, you better come with a mountain of airtight evidence. Documentation is absolutely everything. In the end, the story of the Anjanay Rice Mill is a huge cautionary tale. It's a powerful reminder that an insurance policy isn't some magic shield. It's a contract. It has rules, it has conditions, and most importantly, it has exclusions. So the real question this case leaves us all with is, have you actually read yours?